You won't believe it. A seller lost $1 million on a Vancouver condo and still can't find a buyer. What would you do if you found out that 61% of all active presale inventory in Metro Vancouver is sitting in what insiders call the danger zone? So far behind on sales that the banks won't release construction financing, because that's exactly where we are right now. There's a luxury tower in downtown Vancouver, one of the most recognizable buildings on the skyline. It completed in 2023. And right now, owners inside that building are trying to sell it. One of them paid close to $2.6 million for the 2-bedroom unit. The same unit now is listed for over $1.6 million. A realtor tracking the building says that after taxes and commissions, that seller is looking at a loss of at least $1 million. And that's if they can even find a buyer. Because here's the thing, since closings began more than a year ago, there has not been a single completed resale through MLS in that building. Not even one transaction. Now I want you to stay with me here, because what I'm about to walk you through goes a lot deeper than one building having a bad year. By the end of this video, you are going to understand exactly how all this happened. There's also something I want to get into a little later. Private text messages from a lawsuit that ended up in the public court record. Every property owner and buyer in this province needs to hear this. I'm Sonny Binder, a real estate agent with 20 plus years in this market and over $1 billion in sales volume. So let's get into it. To understand what's happening right now, you have to understand how this whole thing was built. For 30 years, Vancouver's real estate market ran on a pretty straightforward formula. Developers would buy land, launch a pre-sale campaign, sell unit years before the building was even finished, and use that early revenue to fund construction. The whole thing worked because prices just kept going up, every year higher than the year before. So even if a project ran over budget, which happens all the time, developers could still count on selling the remaining units at a higher price than originally projected, and buyers played right along. You would buy a pre-sale unit, wait 3-4 years, and by the time it completed, it was worth more than what you paid. This went on for years. Developers, lenders, investors, agents, the entire ecosystem was built on one assumption: prices go up. And then Bank of Canada started raising interest rates aggressively, 7 times just in 2022. Demand started cooling down. The pre-sale market stalled. Projects that broke ground in 2019, 2020 and 2021 near the very peak, they all are completing now. And these condos are completing in a very different world. Construction costs are the same or even higher. Financing costs are much higher, but what buyers are willing to pay is now a lot lower than before. The gap between what it costs to build right now and what you can actually sell it for, that's where developers are getting squeezed right now. And the pressure being created is bigger than most people realize. In December 2025, Westbank's former Vice President of Development filed a civil suit in BC Supreme Court. She was alleging the company owed her $1.2 million under her employment agreement. Westbank's response was to offer about $200,000, roughly 1/6 of what she was claiming. Now the bonus dispute itself, that's for the courts to sort out. I'm not taking any sides, but here's what matters for this conversation. When the case went to court, an affidavit included what the former VP says are private texts from Westbank's founder. Messages that were never intended to be public. They are now part of the public court record. And what they describe is a company dealing with serious financial pressure that is across multiple major projects. To be clear, none of these allegations have been proven in court. Westbank hasn't confirmed these messages, but they are in public record. And if one of the most prominent developers in this province is privately describing its own projects this way, that tells you something important about where the market is actually sitting. So guys, I would love to hear your thoughts on all of this. Please share your comments. So now let me walk you through these projects these messages reference. The first one is Seneca, a massive mixed-use development near the Burrard Bridge. Originally a 50-50 partnership between Westbank and the Squamish Nation. When it launched, it was positioned as a landmark. Thousands of rental units, a historic partnership, the kind of project people pointed as a proof what Vancouver could be. According to the alleged text, West Bank sold its 50% stake to a pension fund. The Globe and Mail reported this was the largest in a series of divestments as West Bank grappled with Vancouver's residential market slowdown. The second is Oak Ridge Park, one of the most ambitious redevelopments in Vancouver's history. Complete reimagining of the Oak Ridge area. Retail, office, thousands of residential units, a massive new park. That broke ground in 2019. According to the alleged text, it was way behind schedule. Now, delays happen on projects of that size. They are almost always expected. But here's what a delay actually means in this market. Every month a project isn't done is another month of financing cost, construction cost, carrying over cost, all without completion revenue to offset any of it. And when it finally does complete, they are selling into a market where buyers have more options, more negotiation power, and lot less urgency than they did in 2019. And here's another one, Alona, a 43-story mixed-use tower in downtown Vancouver. The alleged text described it is still having many unsold units and vendor take-back mortgages outstanding. Now, a vendor take-back mortgage is when the developer acts as a lender to help a buyer close. It's a tool that gets used when buyers can't secure a conventional financing at the agreed upon price. That is not something a healthy sales environment produces. Now, let me show you the data point I mentioned at the start because this is the one thing I think will genuinely change how you read this market. The Butterfly, a 57-story luxury tower at 1033 Nelson Street in downtown Vancouver, one of the most distinctive buildings on the skyline. This became Vancouver's third tallest building when it completed in 2023. The alleged text describes it was well over budget with closings that are slow and uncertain, and the publicly available sales data backs that up in a way that's hard to look past. Since closings began more than a year ago, there has not been a single completed resale through the MLS. Not one transaction. Nada, zero. And it's not because people aren't trying. One owner paid close to $2.6 million for the two-bedroom unit and closed in July of last year. That same unit is now listed at just over $1.6 million. Another unit in the same building, buyer paid $2.4 million, listed now at just over $1.6 million. Both are sitting, no buyers. Here's what the zero resale reality actually means. If buyers who already own units cannot sell, if there's effectively no secondary market, why would any remaining buyers want to take on a new unit at the original contract price? Why accept a multi-million-dollar liability when you can see right in front of you that the building has no liquidity? And that's the main reason why closings are not happening, that things are slow and uncertain. To be fair, West Bank has publicly stated there have been sales that didn't go through the MLS system and that the listings being discussed are outliers. I think it's worth saying that, but the publicly visible data is what it is. So now let's go further. So what's the government been doing about all of this? Because they haven't been standing still. The first move was extending REDMA, the Real Estate Development Marketing Act, from 12 months to 18 months. Developers used to have to sell 60 to 70% of all units in a building within 12 months to access construction financing. When the market was hot, buildings sold out in days. Not anymore. Projects still aren't launching because developers can't sell enough of those units even with this extension. Then came the GST rebate for first-time home buyers, saving of up to $50,000 on a new condo or a townhouse under $1 million. This is a big number in theory, but here's the problem. First-time home buyers make up only about 5% of the buyer pool for these new condos. The entire presale model was built for investors. Even if you double that first-time buyer share, it is not enough to rescue a market which is built on investors' demand. In Ontario, they went further, eliminating HST entirely for new homes. That is up to $130,000 in savings, available to any buyer, not just first-timers. Early reports suggest developers largely kept prices the same, absorbing the rebate rather than passing it on to the buyers. We will see if that changes anything. There are also fee deferrals, developers getting breaks on upfront municipal costs to start construction, federal loans for purpose-built rentals, relaxed affordability requirements on new developments, and the Kelowna Airbnb exemption. The BC government allowing Kelowna to opt out of the short-term rental restrictions after vacancy rates hit nearly 7%. That one isn't directly about pre-sales, but it signals how aggressively governments are looking for any level to restart this market activity. Meanwhile, and this one's going to hit a lot of homeowners in the Fraser Valley, some municipalities are floating the idea of raising property taxes to offset the developers' fees that aren't coming anymore. Isn't that funny? During the boom, cities got hooked on revenue from permits and development contributions. Now that pipeline has dried up and the money has to come from somewhere. That conversation is already happening. None of it is working, not really, because the core problem isn't rebates or timelines. The core problem is demand. The investors are gone, and first-time buyers were never the engine this system was built around. Please share your comments on all of this. Now here's the part I want to be direct about, because a lot of homeowners in Surrey, Langley, Abbotsford and the Fraser Valley might be watching this and thinking, that's downtown Vancouver. That's not me. And you're right that you are not in the same position as someone trying to offload a $2.6 million condo in downtown Vancouver. Those are different assets, different buyers, different dynamics. But what's happening at the top of the market doesn't stay at the top. As of February 2026, the composite benchmark price of all residential properties in Metro Vancouver is sitting at just over $1.1 million. It is down 6.8% year over year. Residential sales came in nearly 10% lower than a year before and 28% lower than a 10-year seasonal average. The active listings are 37% above the 10-year average. Metro Vancouver is firmly in a buyer's market territory across both detached and the condo market. And there's something specifically happening in the pre-sale corridor right now that's worth paying attention to. Developers are marketing new projects at around $1,200 per square feet. Meanwhile, 5-year-old buildings nearby, move-in ready, are listed at around $1,000 per square feet. That's a 20% gap. Why would any buyer pay a premium and take on all the risk of buying off a blueprint when you can get something move-in ready for less? The math has stopped working, which is exactly why pre-sales have collapsed. The real risk for Surrey and Fraser Valley sellers right now isn't the luxury market. It is the gap between what they think their home is worth and what buyers are actually willing to pay. When that much wealth gets destroyed at that high end, it changes behavior everywhere. Move-up buyers who were counting on Vancouver's condo equity to fund their next purchase are now short. Investors sitting on pre-sale assignments are sitting on losses instead of gains. The confidence that once drove discretionary purchasing have evaporated, and it doesn't stay contained to downtown Vancouver only. It moves. The real risk for homeowners in Surrey and Fraser Valley market right now is that gap. That gap is between what sellers think their home is worth and what the market is actually willing to pay for it. I'm seeing playing it out in real time. Sellers operating on 2022 numbers. Buyers are operating on 2026 reality. And that's exactly why people reach out to me for the home evaluation. What I give them isn't a number pulled out from last year's headline or a BC assessment estimate. It's the real read on where the specific property sits in today's market. What strategy actually makes sense right now. If you want clarity before you make any decisions, whether you're thinking about buying, selling, or investing, just want to know where you stand, the link to book a free call is in the description below. Or you can reach me out directly, 778-234-2000. No obligation. I'm going to just give you straight answers. There's one more layer I want to leave you with, because this one goes way beyond any single developer or any single project. Of the roughly 16,500 pre-sale units on the market in Metro Vancouver, more than 61% were in what industry insiders call the danger zone, which is far behind on the 70% pre-sale threshold that the lenders need before releasing construction financing. And that is why the developers cannot proceed further. That's not a fringe problem. A majority of pre-sale inventory is sitting in financial uncertainty, and it is showing up in the land sales. More than 22% of land sales over 5 million in Q1 of 2025 was court ordered, double the rate from the same period the year before. Developers aren't choosing to sell their land. courts are making them. A real estate journalist who has covered this space for years put it plainly in a CBC interview. The trouble isn't exclusively to one company. Pre-sale purchasers are not closing, bills going unpaid, struggles have liquidity, which tells you this is a system with wide stress. Not one company, not one building. The model that built Vancouver's skyline over the last 2 decades is under more pressure than anyone has seen in a very, very long time. So what happens next? Especially what happens when all those stalled projects eventually have to complete. This is what every homeowner in this province should be thinking about. There's also something I haven't covered yet that might be most important thing for anyone thinking about buying or selling in the next 12 months, because buried inside all of this disruption is an actual opportunity, a specific type of transaction in a specific part of this market where the numbers are more in your favor than they have been in for years. Most people don't even know it exists. And if you have questions about your specific situation, where your home stands, what you should do right now, whether it makes sense to buy or wait, just give me a call 778-234-2000 or book a free consultation using the link below. I will see you in the next video.